Offshore oil and gas is slated for a rebound in the next 2 to 3 years as rising energy prices make marginal projects viable, says EY. In EY's latest research, it states that while the focus has been on shale, offshore exploration and development's ability to grow will provide higher returns over longer time frames. There is reason to believe a return to offshore exploration can be a valuable strategy for oil and gas companies interested in higher risk and higher return projects, EY said. This shift towards increased offshore exploration is being driven in part by a revived energy market. Revitalized interest in offshore has been quietly developing among oil and gas companies, even while shale has dominated their current focus, EY states. Driven by the need for baseline production growth and refining demand for heavier crude, companies will likely begin moving more aggressively to lock down new offshore plays, it said, especially since the long-term viability of successful offshore projects delivers more attractive returns than shale over the life of a field. It stated this rebound will be signaled by demand outpacing supply and a reduction in operational costs, making offshore projects more attractive. In a note to clients, UBS analysts posited that this rebound is already forming. While the oil may be peaking for now, it should remain reasonably well supported with ongoing supply discipline and good global demand from a strong global economy. OPEC's World Oil Outlook report forecasted a massive spike in demand to 2040. The report forecast a massive expansion in global energy demand, including not just electricity but also industrial usage, transport, and agriculture, growing 35% from 2015 to 2040, at an annualized rate of 1.2%. This equates to an additional 96 million barrels of oil equivalent a day. Oil has been on an upwards trajectory since America and OPEC agreed to cut production levels to rebalance the market in December 2016. The Brent crude benchmark reached more than $63 a barrel this week, $82.40. This return to strength marks a growth of 34% from oil's low for the year in June when prices fell to $46.89, and 120% higher than in 2016, HSBC said. Macquarie analysts believe $60 is likely to be the new price floor and could be a stabilization price for oil, which has tracked a volatile path since the 1990s. Barclays Bank has supported this new floor, raising its forecast for the average Brent price in the fourth quarter of 2017 by $6 to $60 a barrel. Goldman Sachs Equity Research noted a growth in offshore capital expenditure. OPEC's forecast a growth in this space, expecting it to overtake shale oil and gas, which is expected to peak by 2022. In the longer term, new offshore areas increasingly become available, including a renewed interest in Alaskan acreage, as well as continued activity in offshore in the Gulf of Mexico and the Atlantic coast, OPEC said. In terms of Australian exploration, energy companies with exposure to offshore plays have been predicted to experience greater growth, while state governments focus increasingly on opening up this space. Australian Petroleum Production and Exploration Association Chief Executive Malcolm Roberts told Fairfax Media the industry is seeing improvement.